Welcome to our episode one of Business and Wealth podcast. I'm Alesha Masaud, a co-founder at TaxApp Accountant, and today I have with me Fahad Gul. Fahad, welcome to the podcast.
Thank you very much.
It would be great, Fahad, if we can kick off by introducing yourself and TaxApp, just so the listeners have an idea as to who they're listening to.
Yes, TaxApp came into being 2 years ago. We are in our third year, probably second or third month, and we're doing great. We're a fully fledged chartered accounting firm focusing on high net worth individuals and small to mid-sized businesses. And the way we do things is a bit differently because we utilize a lot of innovative tools and we focus on a lot of advisory work where we have many one-on-one conversations with our clients, trying to understand their business and how their business can do better in terms of the top line item, which is, of course, their income and, of course, profitability as well. A bit about me, I'm the chartered accountant. We register tax agents, as agents, also external examiners for Law Society. So we do a lot of different things, but high net worth individuals and small to mid sized businesses is, I would say, our bread and butter.
Nice, nice. That's fantastic. And I'm also a partner at the firm. What I want to kick off with today is primarily talking about business structures. I think that's one of the most important things for a business as to what structure they are in. So, have you got a favorite structure or is there one that you particularly like? There are a bunch of different structures, and I may actually go into those. There's the sole trader structure, which is quite popular. There's a partnership, usually works really well if you've got two people in the business. And then there is a company structure, and then there's a trust structure, and then there's also like a company trust structure combined. So that's a broad overview, and perhaps we can do another episode on doing a deep dive in each of those. But today I'd love to know, got a favorite structure for businesses?
That's a good question. Every business and every individual and every family situation and every person's own ambitions and goals determine what structure is best for them. So every single individual, even though they're in the same business, let's say lawyers, choose different structures or their optimal level of operating would be different structure. And why do I say that? Let's say someone who came into the business and their main goal is work life balance. Let's say a working mom came into the business because they didn't want it to do the usual 9 to 5. They wanted to work their own hours. They decided to set up a business. And their main thing is to reach a certain level of a monthly income or a weekly income, and they want to focus more on their family. Maybe a sole trader structure would go for them. But for example, let's say someone who just got a few years down the track of working as a qualified lawyer and they are young and they're ambitious and they want to build that, let's say, 20 or 50 employee firm and they're in that mindset, they would choose probably a different structure to a sole trader. So it depends on number one, your goals, your ambitions, your family situation. And having said that, there are some occupations that you cannot operate in a separate entity. And we can go more into detail in the next episodes. I won't go into too much details, but as I said, everyone has a different answer for their perfect structure. And just last thing I would like to mention is always speak to a professional before starting out the business and the common mistakes. And I'll ask you, what are those common mistakes?
I think people not getting the right advice, doing a lot of internet research, and then just picking a structure that they think is best for them without speaking to a professional accountant to rule out any of the other structures they may have ruled out. For example, I personally really like the protection that a company structure provides because it also removes liability from your personal name, which you can't do in a sole trader. Whereas in a company, because a company is considered as a separate entity, the liability remains to the company if something goes wrong. But sometimes what happens is that people read about the fact that, oh, like I'll have extra costs in relation to a company. And then they choose another structure which may not be beneficial for them, especially if they're a profession which,
Yeah,
where the
so
liability could be higher.
yes, some online website, a trust structure with just individual trustees, which does not provide that corporate veil. If they had a corporate trustee, and then some people just log into the ASIC website and set up a company, and they don't have that constitutional written for the company and don't have those documents of who is the director, what are the initial documents of the company. And then they do a lot of changes and it gets messy and messy. And then so it's always good to speak to a professional. It's about knowing this structure is your optimal structure. Are there ways to change that structure using small business reconstruction CGT exemptions? If there's a pathway available or not. That's why you need to sit with a professional at the very start of the business and put the right structure in place or the plan in place to go to that right structure while you want to save on costs initially. Yeah. That's like something that you need to consider when starting a business. I'll ask you this question, Alicia. Let's say if someone is ambitious, looking to employ many employees, and they're looking to grow the business, they want to achieve maximum, they want to build their business. And let's say they are in the trades, they're not doing this business to replace their salary. They're doing this business to maximize their wealth. What would you think is going to be a good structure? Of course, all of this, what we're saying in this podcast, nothing is tax advice, nothing is financial advice. It's just general discussion between two directors of tax app. What would you think, Alicia? Yeah.
I think that's a great question. Even if it wasn't a trades company that you're talking about, it could be any business having that high ambition, wanting to employ employees. My favorite one in that scenario is going to be the trust in a company structure. So, for example, what will happen is you've got a company set up through which you're running the business, and that legal liability doesn't cross over to you as a person. It stays to the company, which I really like the concept of. And you're running the business directly through the company. And then the shares of the company are held by the trust. And then the trustee is a corporate trustee. So you almost got quite a bit of protection there from a owner's perspective. But also the reason why I like the structure is because it provides the maximum form of advantage from a tax and accounting perspective. You've got a lot more levers in a company structure, and then you've got even more levers in a trust structure. When you combine the two, it's just so powerful.
You can get advantage of the company and also you get advantage of the trust. And of course, there's separation of assets as well because there's a trustee company holding shares on behalf of the trust and you're running the business out of the company. So you can get things and so many grants out there that trusts are not eligible. For example, our R&D grant, and there's some New South Wales state grants that are only if you're a company, if you're operating a business just from the trust with the trustee company, you eliminate R&D incentives and you eliminate like some of the grants that are only applicable if you were a company structure. So you're already a company structure. Now you're getting a salary from the company. Your employees are getting salary from the company. You can, of course, pay as a dividend to the trust because the trust is holding those shares and then you can pay the dividends and then that your trust has many beneficiaries. For example, if your wife is not working, you can distribute direct income to her and use her low brackets to get the maximum advantage if you have over 18 children, dependents and things like that, or extended family, or you want to donate money to some extended family or even your, let's say, like a charity or any other organization, and then you can get benefits of the bucket companies as well.
Yeah, I
So,
love the bucket company.
yeah.
That's super powerful, isn't it? On the point of the incentives, we've had a really interesting client come through to us, and I'd love for you to share the story that happened with the way that their business was set up, which hindered their ability to get these incentives that we were just talking about.
Yeah, so a client came up to us and they were developing a product which is very new. It's a very technologically advanced product and they're spending huge amount of money developing it and it's amazing. It's a brand new thing. I won't go into detail what industry the product is, but it's tech advancement in that industry. So they came from another accountant and that accountant advised them to set up their business inside a trust with a corporate trustee. That accountant never explained research and development grants, which are called R&D grants. So essentially, you get money back of the investments that you make in terms of developing that new technology and bringing it into the world. The government actually gives you money for developing it inside Australia compared to you could have gone in any other country and developed that product. So there's so many incentives available. Because they were in the trust, they lost all of it and they did not know about it. The accountant did not explain it to them. It was very unfortunate the way they got that advice and they weren't able to claim that. And they didn't even know this form of incentives are available. Another thing that I also mentioned, there were many grants that been offered by New South Wales government for companies developing new technology and making New South Wales like a leader in the world in technology, and government for providing a lot of grants. Looking at that, I'm not a grants expert, but looking at the product, I think they would be able to get most of it. But the basic requirement of those grants was the applicant should have been the company. So they were a trust with a corporate trustee. They weren't eligible to apply for those. So it was an unfortunate thing. Always need a good accountant, always speak to a professional and give as much information as you can, because the more information we have in hand, the better we can help you. So that was unfortunate for them. If they were, let's say, your favorite structure, Alishba, trust and sorry, company and a trust and a corporate trustee, they would have been eligible to all of those and they would have so much money in the bank through those incentives that they can spend more and develop that product and bring this new technology into Australia. Yeah, always have a good accountant on your side and give as much information as you can to them.
That's fantastic. I think it was a great story to wrap up our conversation today. Quite a powerful story. And every time I think of that client, I wish they'd come to us sooner. But better late than never. Good advice saves you thousands and thousands over time.
Hundreds of thousands.
Hundreds of thousands. That's exactly right. On that note, this is a great podcast, and we'll see you in the next one.